Imagine waking up in 2025 to discover that America has entered one of the greatest financial crises in its history. Out-of-control debt, skyrocketing costs, and a shrinking middle class. This is the reality many economists and investors are predicting, and Patrick Bet-David believes we are on the brink of something catastrophic. With national debt reaching $33 trillion, the highest interest rates in decades, and rising global tensions, the financial system appears to be on the edge of collapse. But here's the real question: are you prepared for what's coming next? In this video, we'll explore the main reasons behind this potential economic meltdown and, more importantly, how you can protect yourself and even thrive during uncertain times. Drawing from Patrick Bet-David's sharp insights and a strategic outlook for 2025, we'll uncover what's happening behind the scenes of the American economy and the steps you can take right now to secure your financial future. Stay until the end, because what you learn today could be the difference between struggling in chaos or seizing the opportunities that only emerge during a crisis. In 2025, the U.S. national debt is nearing $35 trillion, solidifying itself as one of the most significant economic challenges in the country's history. But what does this mean for the economy, and more importantly, for you? Every 1% increase in interest rates adds about $320 billion per year to the government's interest payments, funds that could otherwise be directed toward education, infrastructure, and healthcare. This reality doesn't just affect the government, it directly impacts household finances. With average credit card interest rates reaching 23%, personal debts can double in just over 2 years. Moreover, millions of Americans are resuming student loan payments after the pandemic-era pause, adding $300 to $400 per month to family expenses. Since 2020, trillions of dollars have been injected into the economy to prevent collapses during the pandemic. However, this flood of money has fueled persistent inflation. Now, in 2025, essentials like food and energy continue to rise in price, while wages remain stagnant for much of the population. The result? The middle class is being squeezed harder than ever, and the cost of living is skyrocketing. For example, the average price of a gallon of gasoline, which hovered around $2.50 in 2020, now exceeds $4 in many states. Low and middle-income families are struggling more than ever to make ends meet, deepening the economic divide. Globally, geopolitical tensions continue to impact the American economy. The ongoing war between Russia and Ukraine affects energy and food markets, while the conflict between China and Taiwan threatens semiconductor production, critical components for cars, smartphones, and various electronic devices. Additionally, as U.S.-China trade relations grow more strained, many American companies are shifting their operations to countries like India and Vietnam. While this transition may yield long-term benefits, in the short term, it drives up costs for both consumers and businesses. The early warning signs of a potential recession are becoming increasingly evident. The transportation sector, for instance, reports freight volumes dropping by as much as 50% in some regions, signaling a significant reduction in economic activity. In the automotive sector, delinquency rates on car loans are climbing, revealing that many families are beginning to face more severe financial struggles. When we combine these factors, rising debt, persistent inflation, geopolitical tensions, and signs of economic slowdown, it's clear that the U.S. economic system is under unprecedented pressure. As Patrick Bet-David points out, we've been postponing an inevitable crisis by accumulating debt and printing money. But postponing is not solving, and the cost of this delay may be more than we can bear. In 2025, the impact of the crisis isn't just in abstract government numbers, it's on the dinner table of every American family. Inflation-adjusted wages have lost purchasing power, and essentials like food and energy are taking up a larger share of household budgets. For example, in 2010, 10% of a family's income could cover food and transportation. Today, that figure can exceed 20%. This rise in costs is forcing families to make tough choices: pay the bills, invest in education, or save for the future. With interest rates at historic highs, financing these expenses has become even more expensive. Many people are turning to credit cards to cover everyday costs, but as we've discussed, this only deepens the trap of high-interest debt. The American middle class, historically the backbone of the economy, is shrinking. In 2025, only 50% of Americans identify as middle class, down from 61% 30 years ago. This decline is most evident in access to housing. The average price of a home has risen nearly 40% over the past decade, while wages have failed to keep up. Another example, the average cost to rent an apartment in major cities like New York and Los Angeles now exceeds $2,500 per month, pushing many families into suburban areas. This shift increases transportation costs and extends commute times, adding yet another layer of financial strain. Student loans, credit card debt, and auto loans are all at record highs. Americans collectively owe more than $1.7 trillion in student loans, and the resumption of payments this year has added a new layer of financial pressure for many families. Meanwhile, delinquency rates on auto loans have surged by 17% compared to last year, a clear sign that many people are reaching their financial breaking points. Even those who manage to keep up with payments are struggling under the weight of their debt, which is crippling their ability to save or invest for the future. As Patrick Bet-David emphasizes, debt not only robs financial freedom but also creates a barrier between people and their long-term goals. The effects of the crisis aren't just financial, they're taking a toll on families' health and well-being. A recent study revealed that 62% of Americans say financial issues are the leading cause of stress in their lives. This stress contributes to mental health problems like anxiety and depression, as well as physical illnesses related to stress, such as hypertension. Families with fewer resources also face challenges accessing healthcare. Even with insurance, healthcare costs remain high, and about 40% of Americans report struggling to pay unexpected medical bills. The economic crisis of 2025 goes far beyond numbers and projections. It's impacting the quality of life for American families. As Patrick Bet-David warns, ignoring these warning signs means preparing to be caught off guard. Understanding how these changes are shaping reality is the first step toward making strategic decisions to protect yourself and your family. Economic crises may seem like times of stagnation and loss for many, but for the wealthy, they often represent opportunities to expand their fortunes. Patrick Bet-David highlights that in times of crisis, those with capital and strategic vision can make significant moves. For example, during the 2008 financial crisis, investors like Warren Buffett bought undervalued assets that delivered massive returns in the following years. In 2025, we're seeing something similar. With rising interest rates and shrinking purchasing power, the real estate market presents opportunities in undervalued properties. Major investment funds like BlackRock are purchasing properties and solidifying their dominance in the sector. For smaller investors, this is the time to monitor local markets and seek out promising deals. Beyond real estate, the technology sector remains one of the most promising areas, even in uncertain times. Artificial intelligence and semiconductors, for instance, are booming markets, with companies like Nvidia and Taiwan Semiconductor leading the technological revolution. In 2025, many investors are exploring thematic ETFs that offer diversification into sectors such as AI, biotechnology, and clean energy. Here's a practical example. If you had invested $10,000 in Nvidia stocks 5 years ago, you'd now have over $60,000. The key is to identify sectors that will continue thriving despite economic turbulence. Crises are also ideal periods for diversifying income streams. Patrick Bet-David frequently emphasizes the importance of creating passive income flows, such as dividends, royalties, or property rentals. For example, dividend-paying stocks from stable companies can provide a consistent revenue stream, while investments in REITs, real estate investment trusts, allow you to earn from the real estate market without owning physical property. Even small investments can grow exponentially. Imagine investing $5,000 in a dividend fund with a 4% annual return. That's $200 per year, modest at first but growing over time thanks to the power of reinvestment. As Patrick often says, the wealthy buy when there's blood in the streets. During crises, high-quality assets are often sold at bargain prices due to widespread panic. In 2025, we see this happening with small businesses, commercial properties, and even stocks of solid companies experiencing temporary downturns. Stoic philosophy teaches us to remain calm amidst chaos and act rationally. Adopting this mindset during crises allows you to make strategic decisions while others act out of fear. While 2025 brings challenges, it also offers opportunities that can transform the trajectory of those who are prepared. Identifying growth sectors, building passive income, and seizing moments of panic to invest are strategies the wealthy have employed for generations. The key is to stay vigilant, informed, and ready to act when opportunities arise. If you believe that knowledge and a strong mindset are the keys to transforming your financial future, hit that subscribe button now. Leave a comment sharing your biggest insight, send this video to someone who needs it, and don't forget to give it a like to help spread the message. Let's grow together with wisdom and purpose. Protecting your wealth during a crisis starts with diversification. As Patrick Bet-David and other financial experts emphasize, spreading your resources across various asset classes minimizes risks. In 2025, this means maintaining a mix of stable company stocks, index funds, treasury bonds, and for those familiar with the market, a small exposure to cryptocurrencies and precious metals like gold. For instance, imagine allocating 50% of your investments to stocks, 30% to bonds, and 10% to alternative assets like cryptocurrencies and REITs. This strategy shields you from sharp declines in any one sector and positions you to benefit from economic recovery. In uncertain times, liquidity is key. Having cash available allows you to seize opportunities or handle financial emergencies without selling assets at a loss. In 2025, with interest rates at historic highs, investing in short-term bonds or money market accounts yielding 5% annually is a smart way to maintain liquidity while earning modest returns. Warren Buffett exemplifies this approach. Berkshire Hathaway often holds billions in cash, ready to move quickly when promising investment opportunities arise. For the average investor, the rule is the same: keep 6 to 12 months of essential expenses in a liquid emergency fund. High-interest debt is one of the biggest threats to wealth during a crisis. With credit card rates reaching 23%, any outstanding debt could double in just over 2 years. This makes eliminating or renegotiating high-cost debt an absolute priority for protecting your financial health in 2025. If you're carrying significant debt, consider strategies like the avalanche or snowball methods to prioritize paying off high-interest accounts first. Alternatively, look into balance transfer offers with 0% promotional rates. This tactic can save you hundreds or even thousands of dollars. Having the right insurance is another critical component of wealth protection. Unexpected medical expenses, property damage, or the loss of a loved one can wreak havoc on your financial stability. In 2025, review your life, health, home, and auto insurance policies to ensure they are up to date and provide sufficient coverage. Patrick Bet-David often underscores the importance of planning for the unexpected. Insurance isn't a luxury, it's a vital defense against events that could otherwise destroy your financial foundation. Finally, protecting your wealth means resisting impulsive actions. Crises are temporary, but emotional decisions can cause permanent damage. Adopting a long-term perspective aligned with your financial goals helps avoid mistakes like selling valuable assets in a panic. Stoic philosophy reminds us to focus on what we can control and accept what is beyond our power. Applying this to finances means staying calm, analyzing the facts, and sticking to a structured plan, even in turbulent times. Protecting your wealth in 2025 requires a combination of strategy, patience, and proactive measures. Diversification, liquidity, debt elimination, and choosing the right insurance are essential steps to ensure your wealth not only survives but thrives during uncertain times. In times of crisis, your mindset can either be your greatest ally or your worst enemy. Patrick Bet-David frequently emphasizes the importance of focusing on actionable steps, a lesson the Stoics have practiced for centuries. Concentrate on what you can control. While we can't dictate interest rates or market behavior, we can manage our spending, investments, and daily financial decisions. Where some see crises as a time to retreat, winners see opportunities to grow. In 2025, with advancements in artificial intelligence and shifts in the job market, acquiring new skills could be the difference between thriving or being left behind. Harvard has already highlighted that executives need to master up to 10 new skills every 18 months to stay competitive. Whether it's learning about AI, digital marketing, or practical skills like financial management, investing in courses and training offers some of the best returns during a crisis. Imagine spending $1,000 on a course that enables you to increase your income by $10,000 annually, an unmatched ROI. Many investors make the mistake of abandoning their plans during crises. However, 2025 presents unique opportunities to consolidate investments in high-quality assets. As Patrick Bet-David and other experts point out, index funds, blue-chip stocks, and thematic ETFs are solid options for long-term growth. For instance, investing $500 monthly in an index fund like the S&P 500, with an average annual return of 8%, could grow to over $75,000 in a decade. The key is consistency, even when the market feels unstable. A crisis is also the perfect time to strengthen connections. Patrick often highlights the value of surrounding yourself with people who share your vision and can help you identify opportunities. In 2025, as the economy restructures, a strong network can open doors to business ventures, partnerships, or even invaluable insights. Attend events, conferences, or even join online groups in your area of interest. Well-nurtured connections often lead to collaborations that accelerate your growth, even in the most challenging periods. Finally, thriving in a crisis requires patience and the ability to celebrate small wins. Focus on measurable goals, like saving a specific amount or acquiring a new skill each quarter. This approach not only keeps you motivated but also creates a cycle of sustainable growth. Crises may seem like periods of contraction, but for those prepared, they are times of extraordinary opportunity. With a stoic mindset, consistent investments, continuous learning, and strategic relationships, you can not only safeguard your financial position but also pave the way for an even more prosperous future. We are living in challenging times, but remember this: every crisis carries within it an opportunity. Patrick Bet-David reminds us that it's not just about surviving the turbulence, but thriving in the midst of it. With the national debt projected to surpass $33 trillion in 2025, interest rates at historic highs, and global shifts reshaping the labor market, adopting a strategic and disciplined financial approach has never been more crucial. The rich keep getting richer because they understand the rules of the game. They invest during downturns, diversify wisely, and maintain a long-term mindset. But here's the secret: you can use these strategies too. The difference doesn't lie in how much money you have now, but in what you do with it starting today. Think about what you've learned: reducing debt, diversifying your income, building strategic relationships, and harnessing the power of consistency. Imagine where you could be a year from now by implementing just one of these strategies. As Patrick emphasizes, those who act with vision and discipline during tough times are the ones who emerge stronger. And never forget, your mindset is your greatest weapon. Stoic philosophy teaches us to focus on what we can control and accept what lies beyond our reach. In an uncertain world, this approach is the key to staying calm, making rational decisions, and continuing to progress, even amid chaos. So, the final question is, what will you do with the insights you've gained today? The crisis of 2025 can either be a roadblock or an opportunity, and the choice is yours to make.